Hi, everybody. In this episode, I'm here with Sergey Nazarov, co-founder of Chainlink, to explore how blockchain technology and verifiable organizational identities are reshaping the foundations of digital trust. As blockchain's technologies are revolutionize industries from finance to supply chains, ensuring that authenticity of participating entities and data remains a critical challenge. We will discuss how Chainlink standards intersects with frameworks like the VLEI to create tamper-proof systems for cross-chain, cross-infrastructure transactions, fraud prevention, and automated compliance. Sergey, I'm really glad to be with you today on this trust talk, and we can probably start with an introduction and explaining also what is Chainlink and what is your role as a company in the evolution of finance.
Great, great. Thank you, Alex. Great to be here. Always great to chat with you. Chainlink is really kind of like the backbone infrastructure of the blockchain industry, performing all the critical actions that blockchains need to become useful for capital markets transactions, but which they themselves cannot perform. And that's a lot of different computations, data, and connectivity challenges. For example, if you want to make a tokenized fund, you're going to need the nav data from a fund admin. You're going to need to connect to many different chains to accept payment for the tokenized fund. You're going to need to integrate back into your traditional systems through a middleware. Those three challenges alone will require three different parts of what Chainlink does. So Chainlink is really a set of data standards and connectivity standards and computational standards to do all the data connectivity and computations that blockchains need but don't do for capital markets transactions. And capital markets transactions are actually very complex because they have layers of identity, layers of connectivity, layers of data that traditional blockchain transactions don't. Usually traditional blockchain transactions are, I send my 5 cat coins to you, you send me your 3 dog meme coins, and we're all happy because, the price of Bitcoin went up and everyone's happy. Everything went up. In the capital markets, however, there's all these accounting requirements, there are identity requirements, there are data valuation requirements that all have to meet a stringent regulatory standard. And so what Chainlink does is it connects you to the data source and makes sure that the data source is meeting the standard to do the transaction on chain. It connects you to other chains. It connects you to systems like Swift and for Swift messages to be used in your blockchain implementation. And it also now is going to connect you to the VLEI and allow your level of identity, which is the most widely used, most well-regarded level of identity in the capital markets, to be used as a part of the transaction. But what Chainlink really provides is this collection of services, infrastructures, protocols that solve all of these problems around data, connectivity, and these additional computations that you need to do these more complex, let's say, next generation smart contract transactions.
Excellent. Interestingly, at GLEIF, we also very founder of interoperability. We try to make sure that the legal entity identifier, for example, is mapping with other identifiers like the BIC that is used on the Swift network. And because obviously systems needs to talk to one another, and siloed system with different types of identities needs to connect. And we see the LEI as kind of a connector of identifiers, not only with BIC, but also with other identifiers like the ISIN, the instrument identifier, and so on and so forth. So trying to bring that identifier through the VLEI on blockchain and create this portable identity and portable credential system across chain, I think makes a lot of sense. And we really glad to work with you. We recently worked on a joint report explaining the challenge of identity and the challenge of compliance on public chains, and how solutions like yours and our standards and protocols can help solve that. How, in your view, can you explain to our audience how can blockchain and identity standards enable institutions to strengthen compliance while reducing operational costs on infrastructures like blockchains, but also traditional infrastructures?
I think the automation of compliance is now possible because of the cryptographic proof that you can receive about how the compliance work was done.
Mhm.
So right now, the way the world of compliance looks is that I can't trust your compliance process and you can't trust my compliance process. And the regulator can't allow us to reuse either of our processes for a third counterparty. And so everybody's spending huge amounts of money replicating the same compliance solution, the same compliance workflow. And then what the bad actors do is they find the people that are able to replicate the compliance process in the worst possible way. And so that's where all the fines and all the AML KYC compliance failures come from. It's not because they went to the best AML KYC compliant institutions. It's that they went to the ones that do it the weakest.
Mhm.
And so now what we can do with the automation of compliance, using blockchains, using smart contracts, using Oracle networks, using VLEI and its carry cryptographic proofs, is the ability to prove in an automated way that the compliance of a certain identity or a certain transaction is meeting a certain high standard of compliance. And what that means is we can automate using Oracle networks. We can verify key things about identity, key things about a transaction. We can inject those verifications into the blockchain as a single source of truth, not only now about ownership, but also about compliance. And ownership and compliance actually go very well together, because for you to transfer ownership, for you to engage in using your ownership to put your assets in a collateral management relationship or in a trading relationship, you need compliance. So the initial data that blockchains have been used well for has been ownership data and trading data. But compliance data, if it's verified to a high enough standard, can be layered into and on top of that ownership data. And in being layered into and on top of that data, you get a very efficient form of ownership, where if I own something and I want to transfer it to you, or I want to use it for a collateral management purpose, or I want to put it in a trading venue, in the traditional system, I will have to go through huge amounts of AML KYC forms, processes, verifications. What I think the next stage of the whole compliance industry is really the automation of compliance, so that if I am deemed compliant going through your process, then the proofs from your process verify that you met a certain standard of verifying me that somebody else can reuse. And so I don't have to go through their verification process or the exchange's verification process or someone else's verification process, because we have already in an automated way verified me enough.
Mhm.
And the cryptographic proof and the reliability and quality of the verification and the ability to prove its quality is so high that the government systems, the legal system, the counterparties should all be comfortable accepting it. That's kind of where I think this industry is going, and what blockchains and oracles will do for the compliance industry in general.
Yeah, it's interesting because this week I was at Money 2020 running, sharing a roundtable with policymakers and in the industry, where we were talking exactly about that topic. The challenge I see with the current AML, CFT, and KYC process is that they adapted to a analog world, not to a digital world, and it puts at risks PII information, privacy in general, at a level that is actually way too high compared to what it's supposed to be used for, which is AML, CFT, and other illicit activities. So I think having better systems like the one VLEI and blockchain, and you can enable uh, preventing data to be exchanged unnecessarily, will clearly be a positive for everybody, especially the users who are suffering from that at the end of the day, with leaks and hacks of databases where that information is today recorded. And that's really where I guess your Chainlink automated compliance engine is all about, right? At the end, what is it? What's the goal of and the benefits for the capital markets of and the DeFi community actually of that Chainlink automated compliance engine?
The goal of the automated compliance engine of the Chainlink case is really to allow the reuse of compliance activities in a way where if I conduct compliance activities in my institution, I can then assign that compliance activity to your identity. So if I'm a VLEI issued institution, and then I give you a credential as a user or a client or an employee, you can now use that credential with others. You don't necessarily have to go through 5 more verification processes with 5 other counterparties in order to do a transaction. And what this does is it eliminates the user's need to share that data directly with more people, with more institutions, which limits their exposure to the places where their data is kept, which they definitely want, as you said. It lowers the compliance cost and the compliance burden of various institutions as a whole. And it allows the creation of technical standards for compliance instead of vague legal standards. You and me, when we've talked before about various standards, payment standards, messaging standards, now compliance standards, identity standards, I think we talk about ourselves as standards geeks.
Mm-hmm.
And I think you and me and a few other people in the financial markets, the financial infrastructure community, really do see standards as the thing that allows financial markets globally to operate. And there really is no clear standard for how to define compliance in a technical way right now. Mm-hmm. There are a few different standards for how to define the requirements of data. There's some identity standards, VLEI and LEI being the leading one of which. There are a number of other standards for messages like SWIFT that are very widely used. But compliance doesn't have a strong technical standard. It has a lot of legal standards that vary by country and are often very vague, which is why many of the institutions are so unable to comply with them. So really what we see is that the automated compliance engine is a set of standards that are technical, and they technically guarantee you that your compliance will work in line with the requirements of your counterparties and various legal processes and regulators. And the whole compliance process, really, if you can boil it down to certain computations and verifications, and you can then prove that you did those correctly, is not something that everyone needs to redo 50 times. Mm-hmm. It can be done once in the institution that you have an account for, that you enter the financial ecosystem through, and you don't need to onboard to 15 other institutions. You should be able to, from your institution, deal with the 15 other institutions, because your institution can prove to those institutions that you have met their burden of compliance in addition to the burden of compliance of your initial institution where you're a client. This is a massive unlock for the compliance industry. I think it's also a huge feature for digital assets. So my view is that digital assets will really succeed, and we'll get into the hundreds of trillions, when having a digital asset version of something like a tokenized equity or a tokenized commodity or a tokenized fund is actually better than having the TradFi version of that same thing. And there's a lot of things about 24/7, 365 markets, atomic settlement, a whole bunch of great capabilities that blockchains make possible, where the digital asset version of an equity, a commodity, a fund are superior. But I think the compliance problem and the identity problem associated with that compliance is still yet to be fully solved on chain. And so we're working to create a set of standards, open standards, that the whole industry can use to do these transactions in an efficient way, which, to your earlier point, benefits the user, it benefits the institution, and I also think it benefits the regulator and society, because the gameability of a technical system like this will be much, much harder to do than the gameability of the weakest link in the financial system when it comes to compliance. Because we can actually prove that we verified you against an OFAC list. Not just say that we did. We can actually prove that we verified your age and your location and that your bank account has enough to be an accredited investor. Not just that somebody in some organization somewhere said that they did that. So it's a very different standard of proof, and I think it's very compatible with a standard of proof that the VLEI has and the carry system and all those things, which is why I think our collaboration is so exciting.
Yeah, I'm with you there 100%. We have this partnership with you to try to progress this compliance challenge at the end of the day, because I'm convinced that if such a solution is not deployed at length, and we keep doing whitelisting of wallets, for example, as a compliance tool, which we know is not scalable, the regulated digital asset industry will not scale at all. We will stay into these little proof of concept pilots here and there, transactions with 5 or 6 counterparties, but it will not scale. And I think it's an essential component of the equation for sure. So I just shared my reason why I wanted absolutely to work with you guys who are building cross-chain standards and cross-chain portability capabilities for assets, for data. What's your reason to work with us at GLEIF?
Well, I see GLEIF as a root of trust. I see it as a identity provider and system that has been legally mandated and required by regulators for the global financial system. And now I see it continuing to expand beyond that institutional level down to the level of employees and users. So I see it expanding, but really it's a root of trust, right? You need something that fundamentally attests the accuracy of someone's identity in order to include them in a transaction. In an unregulated context, like some parts of DeFi or the public parts of the public chain ecosystem, you don't need identity. You can be anonymous or pseudonymous. You can be completely unknown, and you can still transact. And those systems work on that assumption around identity. In the capital markets, that assumption about identity simply can't be possible. No regulated financial institution can transact with you without identity. And so then the question becomes, how does identity work in this blockchain-based, digital asset-powered Web3 global financial system? And there's really 2 answers to that question. One answer is we do it off-chain completely. We have a parallel system and a parallel flow and a parallel process, and that parallel flow and process has all of its limitations and all of its kind of problems that it has. And it's a flow and it's an out-of-band process that grew on top of the current traditional financial systems, settlement practices, and other transactional practices. That's option number 1. That's not the optimal option. That's the option where identity becomes a source of friction and a force for slowing down transactions and raising transaction costs to the point that digital asset transactions don't look better, but they look the same or worse in relation to compliance and identity. The other option is the option I think you and me are both fascinated and excited by. It's the option where if you have a reliable root of trust to prove an institution's identity and therefore the identity of employees or clients within that institution, and you can represent that on chain, then you can fold that into the transaction, basically. You can take the VLEI, you can take the cryptographic proofs from the carry systems, you can put them into the CCID, the cross-chain ID that we have in the automated compliance engine. You can set conditions in the automated compliance engine's policy part to basically create conditions against that identity. And those conditions can actually automate away a huge amount of risk. So for example, you could say that this identity from my institution is able to trade or interact from my institution's wallet with these 500 other institutions. And it's allowed to do trades or be part of these pools. And it's allowed to buy or, these 50 different tokenized funds from this institution and these 20 tokenized funds from that institution. And now you create a kind of on-chain catalog where the second somebody gets into the blockchain ecosystem, their identity's verified through essentially the VLEI system back to it being as the root of trust. I mean, it's verified by the institution, but the root of trust goes back to the VLEI. And now this person can have a huge universe of global financial products that they can interact with immediately. And that's only possible if you can verify their identity. And you need a root of trust that says this person is this person, or this institution is this institution. And that's the amazing and unique thing that I think the VLEI provides. And you folks have had the foresight and the thoughtfulness to build the VLEI in a way that it itself generates cryptographic proofs. And those cryptographic proofs are then the things that we rely on in the CCID, in the cross-chain identity standard, in the automation engine. And that CCID standard, I think you and me agree, is the standard that people can now start using to prove their identity to each other. Which, if this works out, and you know, we're all doing everything we can to make that happen, we really can get to this world where the ability to buy a digital asset from a identity, compliance, and kind of onboarding point of view can be a month sooner, right? You go from a month-long onboarding process with 15 emails and 10 forms and 20 questions to, I already answered your 20 questions once, and I can immediately transact. And I can do that across hundreds of counterparties. So I really think that together with this root of trust that you folks have created, we can take the blockchain industry and the digital asset industry to a whole new level and actually make compliance a feature. And it'll be lower cost for you to have digital assets, and it'll be easier for you to sell digital assets to a larger market, because the ability for people to buy them from you will cost them less from a compliance point of view. So it's hugely beneficial to have that highly reliable root of trust. So thank you for making it.
Yes, and to our audience who would not know why GLEIF is a good and strong root of trust, as mentioned earlier, we have been created by regulators, and LEI is mandatory in many capital market regulations, and we are still overseen by 70 regulators from 50 countries. So it ensures that the system remains a public good, a digital public good, which is important, and is leveraged like internet is leveraged for doing so many things. In this case, in the world of organizational identity, and with the VLEI down to the staff and the users or clients of an entity. So it's quite a strong. That's the reason why I joined GLEIF, to be honest, mostly because I do see that as a very, very strong enabler for the future of compliance. And on the topic of interoperability and blockchain, one other feature of Chainlink is, of course, to enable this cross-chain interoperability. We've discussed a little bit about that before, but I think it's critical to our conversations here. This cross-chain and actually traditional to chain interoperability that you're enabling. How important is that for capital markets in the blockchain industry, in your view?
Yeah, you're right that it's absolutely critical. And this is really why sometimes it's a little bit more complex to understand Chainlink, is because Chainlink has become a platform. It has become a collection of key capabilities, data capabilities, connectivity capabilities, computational capabilities. The interoperability that you're describing does fall into these two buckets of traditional system interoperability with blockchains, and then interoperability across chains. Now, for this, we actually require both. We require interoperability with the VLEI system, which is the off-chain version of the VLEI. That gets then put in to the CCID, the cross-chain ID. And the reason it's called the CCID, the cross-chain ID, is because that CCID, that cross-chain identity, should allow you to use financial products on many other chains. Because the financial products issued on other chains will not inherently know what's going on in your chain or where the CCID was issued. So you can have some asset manager or bank put you on as a client into the blockchain ecosystem. They give you a CCID. That CCID has a signature from the VLEI proving who you are and going back down to that root of trust in the VLEI, which is the fundamental kind of foundation of all that. And then that CCID can allow you to transact across hundreds of other chains. That's really important because the assets that you want to buy will likely not be on the chain where you initially began your entry into the blockchain ecosystem, because every bank asset manager will have their own chain. They'll have actually many different products on other chains, other public chains. They'll have different products on different chains. And so you'll just have this huge fragmentation. And for your for your on-chain identity in the blockchain world, for your CCID to have value for you, you actually need it connected to all of these places where you can use it to buy something. And so that's really where interoperability comes in here. If you have a CCID issued on blockchain A, and then you want to buy a tokenized fund on blockchain B, and then you want to move it into a custodian on blockchain C, your CCID should allow you to represent yourself accurately and in a legally binding way to blockchain B's asset issuer, and then to move it over to blockchain C's custodian that is going to hold the asset for you for some set of reasons that you want them to hold it. So you really can't have a successful system like this for identity without cross-chain interoperability. And that's really what Chainlink does in a big way for the capital markets, is it creates that initial systems connectivity where we bring on data, in this case, identity, in other cases, AI computation results from risk management systems. We interconnect the off-chain system onto the chain, and then we allow what we interconnect onto the chain to successfully move across chains. In this case, that's VLEI identity going into CCID to become portable across chains successfully. And then in addition to that, the system also has various policy contracts where you can set the policies of how you want the CCID that you created on chain for your client or your employee to behave. So you can not only create the CCID for your employee or client, which is backed by the VLEI, but you can also define what the permitted actions are of that CCID, what chains, what markets on those chains, what financial products on those chains. Is this CCID allowed to interact with from your point of view as the entity that issued it? And so I think you need to create policies that aren't just going to be about how to use the CCID and therefore the VLEI on one chain. You're going to have to set policies about how does this CCID, which is essentially a repackaging of the VLEI, how is that going to be used across chains? Yeah. So you need a very robust cross-chain interoperability system to do that.
And that's clearly the very reason why we started talking at Cybos, probably I think in last year, about working together on that, because that's what I like about working with you, is that I don't have to plug the VLEI in every chain in a way and bring the capabilities of the VLEI credentials to every chain. I can you do that. In other words, you're the experts. We are the organizational identity experts. You are the cross-chain standards expert, and you're enabling exactly what you just described. So it's quite powerful. For the last questions I had was really about, it's not on the script. It's more about what do you think is next. So we're gonna work on this solution. It's been built as we speak, or it is actually out almost. What's next? Do you think in terms of your own plans, being outside of the VLEI or with the VLEI, or and our collaboration?
Yeah, it's a very exciting time for our industry with all the capital markets adoption. I think the US's regulatory stance toward our industry has shifted not only the US market's adoption of our technology, but the whole world's adoption of our technology in a completely different trajectory. So it's massively sped things up. We are basically the most widely used data technology, the most widely used cross-chain technology for capital markets transactions right now. We're the most widely used technology for many different parts of the blockchain transaction in capital markets. This is really our approach to creating open global standards for compliance. Because in working on many of the transactions that we work on with the top banks, the top asset managers, the top financial market infrastructures of the world, and now with many central banks as well, we found that compliance and on-chain identity is a very unsolved problem. It's a problem that every institution tries to solve themselves, and they solve it in a way where it allows them to do what they want to do on-chain, but it doesn't allow the client to use or to interact with all of the other counterparties that aren't that bank.
Mhm.
And as you said earlier here in our chat, that's a huge limitation, because that means that it's not enough for me to onboard with my first institution to do a digital asset transaction. I actually need to onboard with others. And then I need to finally be able to transact. And this just doesn't make sense, because we can actually prove everything that needs to be proven in order for you to efficiently transact and not have to do another month-long onboarding cycle with 20 questions and 15 emails and 10 documents. And you just, there's no reason you have to do that again. And nobody wants you to do it. The other bank doesn't want you to do it. The regulator, if they really think about it, I don't think wants you to do it, because there's a chance that it could be gamed. What I think we're going to be pushing very heavily now is we're going to be relying heavily on you folks and your root of trust as the foundation that's going to prove the identity of these institutions, their clients, their users, their employees, and then looking to simplify the transaction in the digital asset world, right? So the measure of success here, I think, is going to be taking the steps of a successful digital asset transaction down to a lower and lower number that can be done at a smaller and smaller cost, faster and faster, so that when you look at all the steps that you have to follow in the traditional financial system, and you look at all the steps that you have to follow in the digital asset Web3 ecosystem, you end up at a world where you have almost prohibitively expensive cost and time delay for doing it in the traditional system. And in the digital asset Web3 system, because you have an identity root of trust, because you have contracts that can automate and prove things to other chains, because you have CCIP and it can take the CCID and send it across to that other chain, and in literally 1 second, it can verify everything and allow you to transact. You basically get to a world where these capital markets users, clients, financial market infrastructures that we work with, I think, will be eager to adopt something like this. Because compliance is not a revenue generating activity, really. It is just a cost and a risk.
Mhm.
And I also strongly believe it's not going away. Central banks and regulators will not just say, okay, for the sake of transactional throughput or economic growth, we won't have compliance. What's really needed is a way to take those legal requirements for compliance and simplify them down to a set of technical standards and steps such that they can be executed efficiently and at a low cost. So that's what we're doing now with the Chainlink automated compliance engine, the Chainlink case. We are making it so that the system can massively reduce your compliance burden and costs and make your digital assets competitive with the traditional financial systems assets. And I can actually see plenty of people looking at a hot new asset that came out, and there's a traditional version of it, and there's a digital asset version of it. And to do the traditional version, you need to go through a week-long process. And to do the digital asset version, you don't need to go through any process other than click a button. And so I think that this can actually create a huge advantage and feature for the digital asset community and for the Web3 community that isn't fully understood because there haven't been enough of these workflows worked through. But we at Chainlink Labs and the Chainlink community, being the most widely used set of technologies in the capital markets for data, cross-chain, all of these problems, we have had, I think, the experience as a community together with you and other great experts to really solve this problem. And so I'm very excited about solving it.
That's great. Actually, I think you answered my last question pretty well with this last section, but I'm still going to ask you the question if you want to conclude in a different way. So what's the one thing you want our listeners to take away about our combining VLEIs with Chainlink decentralized infrastructures and how they can transform identity verification and compliance automation for cross-border digital finance? That's a long question. What's the one thing you want our listeners to remember about our conversation?
I would say that if you're making a digital asset, I would start thinking about how to simplify on-chain identity and compliance in a way that your digital asset has less friction to get customer adoption than its traditional counterpart. So is there a way for you as an issuer or creator of digital assets to find a way to simplify the onboarding flow, to simplify the identity verification flow, to simplify the accredited investor check, to simplify the AML KYC check, to simplify the OFAC check? How do you simplify these checks and streamline the process of onboarding users into your ecosystem, into you as an institution, so that your clients can spend less time on compliance and more time on interacting with your digital assets and benefiting from them? So this is the thought process if I would go through if I was a product manager at a digital asset issuer or an institution, is that blockchains and Oracle networks and smart contracts will not just simplify ownership transfer or 24/7, 365 trading and atomic settlement. They will also simplify compliance. And what is your plan to simplify compliance in a scalable way? And what are the ways to do that? And so at that point, you're more than free to contact us, and we're more than happy to discuss it with you and show you a clean and simple path that utilizes your existing roots of trust, like the VLEI, to solve this problem in a way that meets your legal requirements, now your technical requirements, and also the counterparty's requirements.
Well, thank you, Sergey. It was an interesting conversation as always with you, and looking forward to the future.
So am I. Thank you, Alex. It's my pleasure. Glad we're working together. Thank you.